Hey traders, this is Ron. Happy Tuesday. Hope you guys are having a great day. As always, everything in this presentation is for educational purposes only. We'll start out here with the Dow, down about 1/3%. You're looking at the diamonds, the Dow ETF. This is TradeStation daily charts. And we have bearish engulfing for candlestick aficionados. We gapped up and then finished lower than where we gapped up, but we also encompassed the previous day's trading action. 1/3% isn't that bad. Also, bears before you get too excited, there was less than average volume. Average volume on the diamonds is around 2.6 million shares. We weren't even at 2 million shares. We're 1.92. We would need a down day technically to confirm this, but then we would need a rise in volume or a spike in volume and getting below the 20-day EMA. So if you're wondering, does that bearish engulfing really mean anything? No, not really. In part because if I take you to the SPY, the S&P ETF, we finished down 0.8%. We take a look at the Qs. We actually finished higher on the day. So we're not getting everybody doing the same thing. It's just right now the Dow. Is it a yellow flag? I wouldn't even call it a yellow flag because there was less than average volume. So to me, it's completely a non-event. We are down to less than about 60 seats or so for tomorrow's event. It's the pre-Black Friday holiday event. I'm going to show you the top 10 stocks for year end, all within 5 minutes of going live. It's no joke. You're going to see the screen. You're going to see the stocks. It's that easy. I'll tell you why seasonality works. I'll show you why it works, just like how we knew about Disney. So go ahead and register at the bottom of the video or in the email you received this video on. But be sure to register ASAP. Probably by the time tomorrow rolls around, it'll be maxed out again. So look forward to seeing you there, and I promise it will be worth your time. And once you see the power of the information I'm going to share with you, you will not pick stocks the old way again. It is that incredible. I look forward to seeing you there. Now, the subject of tonight's video, retail stocks. Boy, did they get whacked. Let's take a look at Macy's. I'm going to zoom out here. Now, Macy's was down in part because of Kohl's, which I'll get to in a second, but Macy's lost 10% today. It's still in a trading range. If you look out here, going back to July of 18, it was up near 40, over a 50% haircut, and this is one gigantic bear flag right now. There's your flagpole. This chop is the bear flag. If you're watching Macy's, I'd probably put an alert around 14 bucks. We get to there, this is bad news for that stock technically. Now Kohl's, they had earnings, they got really whacked, nearly 20%, 19.47. Talk about a spike in volume, that's epic. Like, this is huge, almost equivalent to what happened in May. The stock tried to get back up, it began to fill the gap, but ahead of earnings, you just don't know. And now we gave almost the entire rally back since October. If you're trading Kohl's, if I zoom out here, watch, it's not just 45, it's more like 44 to 45, that $1 range. We get below there, which is only $2 away. Then you start thinking about, my goodness, mid 30s. Now, if you look at Children's Place, PLCE, they were down almost 5% today. I almost call it tandem. They have a double bottom right around 70. I'd put alerts there below 70 on Children's Place. And then, I mean, look back here. Here was 72-ish, 72-ish. Your next major support's 50-ish. Not saying that it's going to drop that far, but those are the support levels. So not good there either. Big Lots, ticker symbol BIG, was down 6%. It already did break through the lows. Remember how I just showed you on, Macy's, Kohl's, and others? Watch those levels. We already just did. If I zoom out on Big Lots, this is bad. There's nothing down there, so it can. I'm not saying it's going to fall to zero, but there's no other support points. Volume picked up today, while it wasn't quote epic. Average volume is about 1 million shares. We were at 1.8 million shares. It was no slouch. Big Lots definitely bearish. Home Depot did not help things either today for retail. Volume here, what was that? 14 million shares, almost 15 million shares, nearly 5 times its average volume. Closed the lows of the day. There's a little bit of shelf support right in here around 224, buck or two away. Then the target, 200, 201, where we had this reversal in August. Home Depot definitely bearish. I'll tell you what, purely from a trade idea perspective, bear calls now up around that above 238, so you'd probably go 240, of course, in a paper trading account. Short call 240, maybe long call 245. How about Urban Outfitters, ticker symbol URBN? They were down today too, almost 7 million shares, 3 times its average volume almost. Watch the 50-day though. This thing has been rising pretty nicely. If it breaks the 50-day, then the next major support level, 24 to 22. 24 used to be resistance. resistance, 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 resistance again, resistance again, resistance again. Broken record, right? Man, 24 was a hard nut to crack. Once we got above it, 24 acted as support. Get above, come back down, bounce. So that's why I say 24 would be the target if we break below the 50-day moving average in orange. Nordstrom's down today, had its own earnings report coming up. If they break the 50-day, I would essentially say 28 and then down to a gap fill. So watch their earnings report. But while Nordstrom's has its problems and many other retailers, ROST store doing just fine. Finished up a little bit today. The 50-day seems to be somewhat of an inflection point. Remember, that's the orange line. This thing looks just fine. How about TJ Maxx or TJX and its stores? Was up on the day 1.83%. Target has earnings tomorrow. They've been, if I zoom out, they've been sitting up there at all-time highs, right? Well, there's a huge gap that's unfilled from its last report, which is around 86, up there to nearly 100, $14 range. We see what happens if they gap down. Anything on a closing basis below 100, gap fill be the target. This could be interesting. Hopefully, if the company does gap down, it doesn't do it all in one day or half of it or 3/4 of it in a day, because then the reward to risk starts to get unbalanced, if you will. Hopefully, we just get a small move in. There's some continuation. So that's it. Keep an eye on the retail stocks if you're following them. Watch those support levels if they do get violated. There are some that are holding up, like ROST stores and TJX, but many are not as we head into the holiday season. And ironically, holiday retailing stocks are not the most bullish this time of year. There's tech stocks, there's other stocks that do quite well. So sometimes it's counterintuitive, just like Disney typically does not do well over the summer, then does well in Q4 and Q1. Again, I'll look forward to seeing you at this event. Like I said, we're down to not many seats left as more emails went out. So go ahead and register. Look forward to seeing you there. I wish you guys all the best, and I'll see you next time.